Professional studios who cannot leave and casual users renting a PDF reader somehow combine into one of the most efficient cash machines in modern software. Roughly 95% of everything Adobe earns is recurring subscription revenue, rather than one-time sales. And by the middle of 2026, that recurring base had grown past $27 billion, still compounding at double-digit pace that few companies this large can sustain. That predictability alone is worth something on Wall Street, since investors will consistently pay more for a dollar of revenue they can count on next year than a dollar that might vanish the moment a customer walks away. Follow that revenue down the rest of the income statement and the story only improves. Net income has climbed more than 300% since 2017. Diluted earnings per share has increased more than 400% over the same stretch. Net profit margin has settled into a stable band in the high 20% range, holding remarkably steady through a pandemic, an economic slowdown, and an entire artificial intelligence panic that was supposed to be terrifying for Adobe investors. Subscription businesses are built to survive exactly this kind of turbulence because the revenue doesn't evaporate the moment a new cycle turns negative. Underneath all of it sits a cost structure almost no physical business could ever replicate. Gross margin runs above 89%. 89%, let that sink in. Meaning that once Adobe has built Photoshop's algorithm or trained a Firefly model, signing up one more paying subscriber costs next to nothing beyond a sliver of cloud server bandwidth. A company making physical products drags raw materials and shipping costs along with every single unit sold. Adobe doesn't. Free cash flow margin runs close to 41%, translating into more than 10 billions of pure spendable cash every year before stock-based compensation. And return on invested capital has climbed from around 20% to briefly above 35%. While return on capital employed has gone from about 24% past 50%. So where does almost $10 billion a year in spare cash actually go? Well, almost entirely into buying back Adobe's own stock. Nearly $9 billion worth in the most recent year alone, at a pace that has only accelerated. The total share count has fallen by close to a fifth over the past decade, and fewer shares outstanding means that same climbing net income gets divided among a smaller pie. Follow for more business breakdowns.